The matter came before the Supreme Court at the instance of the Chief Commissioner of CGST. He appealed against the High Court's order. Leave was granted, and these were civil appeals. Safari Retreats was a lead matter before the Supreme Court. As it happens in the Supreme Court, once a lead matter is admitted and leave is granted, you have Article 32 writ petitions filed directly, and then you have intervening petitions filed before the Supreme Court. So, in addition to the civil appeal, writ petitions were filed directly to the Supreme Court, challenging the validity of Section 17(5) clauses C, D, and or reading down of the aforesaid clauses, as well as reading down of 16(4). This is how the matter came up for a final hearing before the Supreme. Let's start with the highlights of the Supreme Court's verdict. The first observation is it's a verdict of a two-judge bench. Now, two-judge and three-judge benches does not make a difference up to the High Court's tribunal level. You have to accept and follow the judgment, however it is. But at the Supreme Court level, it is easier to persuade another two-judge bench to refer this verdict to a three-judge bench. You just have to persuade them there's a doubt, something is wrongly decided, requires reconsideration, then almost immediately you get it referred to a three-judge bench. So what I'm saying is, Safari Retreats two-judge bench is not as stable as the verdict of a three-judge bench. It can be questioned again in the next future, not in the remote future, in the immediate future also, both at the instance of the taxpayer and at the instance of the department. So that's the first point we need to keep in mind. It's easier to refer a two-judge bench to a three-judge bench. It's far more difficult to refer a three-judge bench to a constitution bench. That's the first point. The second point is constitutionality of 17(5) C, D and 16(4) have been upheld. Similarly, corresponding provisions of state GST Act have been upheld. We can't go there anymore challenging the constitutional validity. That's the end of it. But apart from constitutional validity, the verdict is not the end of the road. I was talking to Mr. Pramod Chopra, senior advocate, and he was saying, what is it, a victory or is it a defeat? And as he rightly said, this is neither a victory nor a defeat. It's just a few potholes were removed, taxpayer is happy, a couple of speed bumps added, revenue is happy, and the journey goes on. It's good for the lawyers. For the others, there's still that uncertainty which has gone on to a slightly different level, not removed. Now, the first thing we need to see is the verdict on the nature of ITC and the entitlements to ITC. ITC, under the GST laws, is not a fundamental right. It never was. How can it be a fundamental right? It is a statutory right subject to statutory conditions. That's the first point to take. And the other point is it's not an exemption or concession. Now this is very important because there are some High Court judgments on ITC saying it is an exemption or a concession and it must be very strictly construed. It can't be, it's a gift by the government. Those kinds of interpretation are not acceptable under GST laws because as the original High Court has said, and which is, that part of it was not negated by the Supreme Court, one of the main objects of the GST legislation is to prevent cascading of taxes. But the statement of objects and reasons, notes on clauses in the bill, the CGST bill says there's a cascading of taxes as taxes are levied are not available to set off against other taxes. And that is the reason why all the taxes were subsumed. And since they were subsumed, into a single tax, there is this right of set-off. And the right of set-off is nothing other than ITC. So ITC is a part of the framework of the GST legislation. It is not an exemption, it is not a concession. That is very important. Now, ITC is not a fundamental right, and that is why the challenge under 19(1)(g) failed before the Supreme Court. When can ITC become a fundamental right is when the taxation rates are so high that without ITC, a person is not able to carry on business. If it comes to that level, I cannot carry on business without ITC because the tax rates are so high. Only at that point of time will it become a fundamental right, and even that is not so much on ITC, but it is on the rate of taxes. So let's jump into the Supreme Court judgment to see what the Supreme Court has to say on this ITC.
So it's not seen, sir.
No, I'm trying it the second time, still not there.
Yes, sir.
So let's go to page 41.
If you can zoom in a little bit more.
Yes. Let's look at section 16, which is extracted by the Supreme Court at paragraph 27. Are you able to see it? Should I zoom in further?
Yes, sir.
Now better?
Yes, sir. Better.
Yes. Eligibility, 16 talks of eligibility and conditions for taking ITC. Every registered person shall, subject to such conditions and restrictions as may be prescribed. So this is the first thing. Subject to such conditions and restrictions as may be prescribed. These are conditions and restrictions on the entitlement to GST, ITC. The second thing is the ITC must be availed in the manner specified in the section. Now, prescribed has been defined as under 282, 87 I think, as prescribed under the rules. So the entitlement of GST is subject to A conditions and B restrictions. So there are conditions precedent and there are restrictions which are subsequent. Both these things are prescribed by the rules. When 16 provides for prescribing by the rules, you cannot defend the prescription by the section itself. So 17(5) cannot be read down or cannot be ultra-virus because it contravenes 16. That is the first point to be made. Entitlement to GST is a statutory right. It is not a fundamental right, and it is according to the law as prescribed, both by the subordinate legislation and by the plenary legislation. So this is what the Supreme Court says at page 41. From the subsection is apparent only a registered person can avail, and a registered person, the CGST. Availability is subject to conditions and restrictions as may be prescribed. Prescribed is defined to mean prescribed under the rules made under the CGST Act. So restriction is subject to conditions and entitlement. And it has to be availed in the manner by 14. Then the Supreme Court goes on to Supreme Court goes on to the validity of 17.5 and the non-obstante clause on 17.5. That's at page 46. Seventeen deals with apportionment of credit. The provisions regarding block credit in 17.5, subsections 5 and 6. So the first thing is the non-obstante clause. Notwithstanding anything contained in subsection 1 of 16 and 18.1. So the Supreme Court has done no magnificent statutory interpretation. This is not like Keshwananda Bharati and reading in between the lines. The Supreme Court basically said the section is valid, subsections valid, clauses are valid. And it simply read the section. And while reading on a plain reading of the section, it says, non-obstante, notwithstanding anything contained in 16.1 and 18.1 means 17.5 will override both 16.1 and 18.1. Now, if you take a look at these two sections, 16.1 talks of eligibility to take this input tax credit, and that is subject to conditions and restrictions, and 5 is one more restriction and condition attached to 16.1. Similarly, 18.1 talks of subject to the restrictions as may be prescribed and availability of credit in certain circumstances. This again is overridden by 5. So whatever is provided in 17.5 will willy-nilly override the benefits given by 16 and 18.1. Now the other subsections of 16 and 18 are not overridden. And they need not be overridden because those sections do not have restrictions or do not give benefits. They have restrictions only. Now we'll go on to clauses C and D. Both these C and D are in different frameworks. Let's go to C first. I'll take the PowerPoint. Are you able to see the PowerPoint?
Yes, sir.
Now I've broken down 17.5C for easier understanding. Works contract services. When first thing is it must be supplied for construction of immovable property other than plant and machinery, except where it is input service for further supply. So basically works contract on services, input tax on works contract services supplied for the construction of an immovable property is ruled out. Available for plant and machinery. Also available where it's input services for further supply of works. So these are the three qualifications. This leads to two questions. What is immovable property and what is plant and machinery? The construction given by revenue on this particular provision is when supplied for a construction of an immovable property means go back to the definition of immovable property. Immovable property has been defined in the CGST definition section, and it says, basically goods other than movable property, and whatever is immovable property is something other than goods. So we go basically back to the definition of Transfer of Property Act. Whatever is earth or things permanently attached to are fastened with the earth becomes immovable property. So the revenue says, look at the definition of immovable property, and whenever anything relates to construction of an immovable property, then no input tax credit is given. And what is plant and machinery? Plant and machinery has been defined in the explanation to the section, and that definition will govern all the words plant and machinery everywhere in this particular part. So this was a simple argument of the revenue where they said immovable property. So take Safari case. Safari's case was input tax credit was expended on incurred on building a mall, a shopping mall. So the revenue said, look, is a shopping mall a movable property? No, it is not a movable property. Since it's an immovable property, then every kind of input tax credit relating to the immovable property gets out of ITC. So plant and machinery is completely different. You can't say a building is plant and machinery. This was the revenues case. Now the Supreme Court went on to very creatively deal with immovable property. Now the Supreme Court said immovable property don't go by the definition under the Transfer of Property Act, but look at the chargeability of property. So when you look at the chargeability and then go by sections and the schedules, this is what the Supreme Court said. I'll take you to the Supreme Court. At page number 56, 13.9, page number 53. The Supreme Court went into the definition of the scope of supply, and the Supreme Court said, look, if you look at all forms of supply, don't stop there, but go on to activities made under Schedule 1, Schedule 2 and Schedule 3. And when they go to Schedule 1 and Schedule 2, we find that land and building, lease, etc. are services. And these are supply of services and renting of immovable property, construction, they have said, they have defined supply of services, construction of a complex so and so, except where the entire construction. So what the Supreme Court did was they adopted this definition, incorporated it into Section 7. So Section 7 plus the schedule, both of them were transposed into the definition of immovable property under 17.5.
I'm sorry. Request the host to kindly mute Mr.
But if there is any question on what I'm saying,
No.
you can take it
I
right
think
now.
the mic is just turned on, sir. I think that's it.
So this is what the Supreme Court says. If there is a complex building so also intended for sale, wholly partly construction, they can supply only if the construction is paid by whichever. Thus, if the construction amount is paid before or after, then that makes a difference. If it's paid after construction completion, it's sale of immovable property. If it's paid before, it's services. If it is paid before, then you can avail the ITC. And if it's lease or tenancy, then also you can avail ITC because lease and tenancy license, all of them are services. So basically, the Supreme Court said you can avail ITC under 17.5C if you're able to demonstrate that the purpose for which you're building is leviable, it's not immovable property, and it's leviable to further GST. So that is a major victory for the assessee because the definition of immovable property has been tweaked to include lease, etc. And this is their conclusion. They have said basic philosophy is that whatever is ITC here and it is leviable to further GST, then of course this is available, the ITC is available. Then the second thing they said was on plant and machinery. They go into the definition of plant and machinery under the explanation. And the words used are plant and machinery. in that explanation, they have said plant, I will read the explanation now. Says plant and machinery, apparatus, etc., and then foundation equipment that are used for making outward supply of goods, and both include foundation and structural supports. Machinery fixed to earth by foundation or structural. And then here, in clause number C, they say immovable property within brackets other than plant and machinery. So the Supreme Court said, look, if you're saying immovable property other than plant and machinery, it means some of the plant and machinery may also be immovable property. So you can't say the moment it's immovable property, there is no ITC. You have to go further and say whether it's immovable property in the sense that there is no further ITC, or is it services? And then you can have it. So the thing here now is, when you come to see works contract services when supplied for a construction of an immovable property. So there under immovable property you go into schedule and see if it's completed before, whether the occupancy certificate is given or whether it's lease and license, in which case this will not arise at all, it is for service. So that's the first thing on works contract, which is in favor of the SSC. Then we go on to clause number C, from C to D. Goods or services both received by a taxable person for construction of an immovable property. Again, the same reasoning on immovable property applies to clause C. And then there's the other one, on his own account, including when the goods are used to the course of further business. So here, the additional question which arises is, what is the meaning of one's own account? The Supreme Court answered this question by saying one's own account will be an account where there is no further services given for his own residential purpose. That is within there. And go to page number 49. Construction cannot be said to be on a taxable person's own account if it's intended to be sold or given on lease or license. And they further elaborated it by saying the second exception, there are two exceptions to D. First exception is received consisting of plant or machinery, and second, construct an immovable property constructing of plant and machinery. Second is goods and services for construction of not made on its own account. Construction is said to be on a taxable person's own account when it is made for his personal use, not for service, used by the person constructing as a setting in which the business is carried out. It cannot be used for his own account if it's for lease, license intended to be sold. So this is another broad pothole removed by the Supreme Court under section 17B. 17C, as you saw, made inroads into immovable property. 17D, immovable property, the same thing that, and on one's account, one's own account also has been in favor of the SSC. Now the third, under 17C is, the words used under 17C is not plant and machinery, it says plant or machinery. Now if you look at this chapter and the section, you will find the words plant and machinery used about 10 times. But the words plant or machinery has been used only once. So the government said that's a mistake, an error, and the Supreme Court can always correct the error in the legislation and read it along. The Supreme Court said no, it's not an error. plant or machinery is different from plant and machinery, and the normal meaning of the word plant or machinery must apply here, and you cannot apply the definition given in the explanation. Now, here the assessee relied on the judgments of under the Income Tax Act. These are the classic judgments. This is what the Supreme Court said. And I think consciously chosen to use plant or machinery. And that means something different. The assessee relied on Taj Mahal hotels under the Income Tax Act, where the sanitary pipes and fittings were held to be plant. Then the other decision which was relied on was the decision in Anand Theatres. Anand Theatres, where the question was whether a cinema theatre was a plant. Now, in both these cases, the issue was Taj Mahal, the issue was not whether the building is a plant. In Anand Theatres, the issue was whether the building was a plant. Both cases, the Supreme Court said Taj Mahal sanitary fittings alone. And in Anand Theatres, it was distinguished by saying, look, even in Taj Mahal hotels, the issue was not whether the building was a plant. And in the context of the Income Tax Act, cinema theatre can never be a plant because there are separate provisions for building. And at page number 67, they said hotel cannot be the building at that. In the result, it is held that the building used for running of a hotel or carrying on cinema business cannot be held the plant because the scheme of 32 clearly envisages separate depreciation for building, plant, etc. I would like you to make a note of the scheme of 32. It is my submission that now let's go to the Supreme Court. The Supreme Court then talked of a third decision, which is the decision of Victory Aqua Farms. That's at page 7. Victory Aqua Farms, the citation is not given here. I'll give you the citation. The citation is Victory Aqua Farms 2016, volume 16 SCC 553, two-judge bench. And this two-judge bench, Justice Sikri authoring, followed Karnataka Power Corporation. The citation there is 2009 SCC 571, three-judge bench. And in a three-judge bench, the issue was whether a power station building was a plant. And they held, yes, it was a plant, and they distinguished Taj Mahal Hotel. And this is what they said. They said it cannot be held so broadly. And they say to differentiate a building and plant, additional so and so, other factors must also be taken into account. Noticing this difference, the Supreme Court in Safari Retreat said, the distinction cannot be while considering the question whether a mall or a warehouse or a building other than a hotel or cinema can be said to be a plant. So ultimately the Supreme Court said, we cannot decide this now. This is a question of a functionality test. The functionality test is very simple. The test is, are you carrying the business in the building as a setting? Or is the building itself a part of your business apparatus? That is the function. If you're carrying on the business as a business setting, you can carry on anywhere and you have this plush office there. That's a building, it's not a plant. But if you're carrying on this particular business using the entire building as an apparatus, like a power station, for instance, or maybe a pond, a swimming pool for your aqua farm. All this is an apparatus for your building, for your business, and this is the difference. And they say, look, if it's found on facts that the building has been planned to say special technique, it will qualify as a plant for the purpose of investment allowance. The word plant used in the brackets cannot be restricted, meaning provided different. So this is the third loophole that the Supreme Court has given. And the Supreme Court said, look, we cannot decide, and all this has to go back to the factual authorities to find out whether this is a plant or building which is as per the facts of each case, and we cannot decide this. So that is why I told you this was not the end of the road. So what do we learn from this? Where do we go on from this judgment? That's something we need to discuss.
It is seen, sir.
So going forward,